Today, the Federal Reserve raises interest rates for a fourth time this year. Rising costs continue to pummel Bitcoin miners around the globe, and Callie Cox of eToro explains how crypto prices are reacting to economic pressures around the world. Welcome to CNBC's Crypto World. I'm Jordan Smith. Crypto prices rising this afternoon following yet another 3/4 point interest rate hike by the Federal Reserve. Now, this hike was expected, and the Fed did say it would keep raising rates as, quote, appropriate, but the central bank also hinted it could pivot from its tightening regime in the future, and that's good news for investors. By 2:15 Eastern, Bitcoin traded at $20,000, Ether jumped above $1,600, and XRP rose to 46 cents. Okay, let's talk about the top stories, starting off with more bad news for Bitcoin miners. Cloud-based mining company BitDeer is delaying its $4 billion deal to go public via SPAC merger, according to a filing with the SEC. Shareholders will vote on a plan to delay BitDeer's listing on the Nasdaq by a year, which was originally set to complete next month. Under the plan, the new deadline would be December 14th of 2023. That delay comes as miners around the globe deal with economic pressures like higher energy and operational costs. In fact, Bitcoin miner Iris Energy says some of its rigs aren't producing enough crypto to cover the cost to finance them. In a filing on Wednesday, the Australian-based company told the SEC it had about $104 million in debt across 3 subsidiaries it could attribute to finance mining rigs. Those rigs are producing about $2 million in profit per month, compared to the $7 million in monthly payments on the equipment. Now, Iris risks default on the loans, but the company's non-recourse lending agreement prevents the lender from seizing assets from Iris. And last up, venture capital firm Andreessen Horowitz wants to back UkiDAO in its lawsuit with the CFTC. Last month, that agency tried an unconventional means of serving a lawsuit when it did so through UkiDAO's forum. Well, in a filing with a federal court, Andreessen said California law requires the agency to identify individuals to serve a lawsuit to, and that the agency hadn't met that requirement. The firm also says the lawsuit doesn't establish liability. For its part, the chairman of the CFTC said the case against the DAO was so egregious it had no choice but to file suit. All right, let's pivot to our main story. With the Fed raising interest rates once again today, I spoke to Callie Cox, who's a U.S. investment analyst at eToro. We spoke about how the state of the U.S. economy and macro pressures around the world are shaping crypto prices. I want to start with the U.S. economy. This morning, we got ADP private payrolls data. Companies hired 44,000 more jobs than expected, and last week, we got the first positive GDP number this year, and thanks in part to a rise in consumer spending. It seems like right now the economy is withstanding this higher rate, higher cost environment. But on the other hand, some experts say to brace for a recession in the coming months. How are you thinking about the resilience in the U.S. economy and how that will affect crypto prices in the near term?
Well, I think we've all been surprised by how resilient the U.S. economy has been because the Fed has hiked rates at an aggressive pace since the beginning of the year in order to get inflation down. And you'd think that it's good news that the U.S. economy is doing well. But at the same time, growth assets like crypto and like tech stocks aren't reacting well to this because the thought is that the Fed will likely have to hike rates even more to get inflation under control. So we're in this weird good news is bad news environment, and crypto and tech stocks are reacting appropriately. Like last month, we saw the Dow, which is bigger economically sensitive stocks, have its best month in decades, but the Nasdaq was lagging far behind, and crypto didn't have a spectacular month either. So crypto's stuck in this really sensitive spot where it's kind of moving with interest rates, and not as much lately, to be frank. But for most of this year, crypto has moved a lot with interest rates, and as interest rates have risen, crypto prices have slowly come down.
I want to stick with the Fed for just a minute. I mean, we had Steve McClurg of Valkyrie on yesterday, and his view was that investors might be getting a little too ahead of themselves in regards to expecting a quick pivot from the Fed. What's your take on that? And do you think that investors are right to price in a pivot as they seem to be doing right now?
I think it's going to be more of a shift than a pivot. And it's funny, I'm actually writing about this week. These are 2 words that sound the same, 5 letters, but they're fundamentally different when you think about the Fed. I mean, the Fed is likely going to shift policy over the next few months, i.e., maybe take their foot off the brake for rate hikes, hike rates a little bit slower. But there's a good chance that we'll still be in a persistently high rate environment, which is not a supportive environment for risk assets like crypto. Investors are optimistic and we love that. But, we worry that they are getting a little too optimistic given that we're going to be in this, it looks like we're going to be in this high rate environment for a while. Look, the Fed's not going to cut rates until something breaks, right? And we don't want something to break. That's not good for anybody. But later today, we should hear about what Powell's plans are for high rates, and that should help us recalibrate to where we are.
What does a high rate environment, a persistent high rate environment, mean for crypto prices? I'm asking you to pull out your crystal ball a little bit, but does that mean that investor sentiment falls because this pivot that they might have priced in isn't coming to fruition?
Yeah, bad news. I don't have a crystal ball, but I can talk to you a little bit more about the environment. And I think, honestly, I joke about the crystal ball, but I think that's what people are really struggling with. Crypto has such a short track record, and we haven't seen how it's performed in a high rate environment like this. At least with the stock market and the bond market, we can take a look back at similar periods and say, okay, they survived. This is kind of what it looked like. With crypto, you can't really do that. You have about a decade of data to lean on. So I think that's part of all the uncertainty that we're dealing with now. Crypto is such a young market, and it's so sensitive to the risk appetite of its investors that we just don't know how it could perform. But at the same time, I think there's enough adoption out there that crypto doesn't go away with this. I just think the crypto industry looks different. And we've seen it change so much this year. We've seen a few firms fail. We've seen a lot of focus turn to projects with utility and proven, coins and projects like Bitcoin and Ethereum. And I think we'll see more of that too. More questions around what the utility really is for crypto. More questions around if you're investing, how you get your money back, how that project pays you back. And I also think, investors are just going to have some hard conversations with themselves about their crypto allocations.
Yeah, I want to ask about risk appetite. I mean, you mentioned that it fell off as crypto entered a bear market, but now you look at something like Dogecoin, for instance, that cryptocurrency has taken off in recent days as Elon Musk has taken over Twitter. Is that a sign that retail investors might be ready to take on more risk or maybe are taking a chance to speculate a little bit more?
Well, I think it's a sign of two things. I think it's a sign of, crypto and this community-based investing not going away. It's here to stay. The genie's out of the bottle. But I also think it is a sign that investors do have a little bit of risk appetite still. They haven't been completely washed out of the market. Retail investors and institutional investors alike are still active, even though they're doing so in a very intentional way, and they're acting a little more anxious. They're hedging more. They're really paying attention to what risks they take. But I was always surprised by the takes of people thinking that meme stocks would go away, that investing in altcoins would go away. I think the industry will thin out, and chances are not all altcoins are going to make it through this cycle. But the appetite for it, it just isn't. It's a trend that's going to stay. It's just going to stick around because we know that we can connect to other people through networks, and we understand that community-based investing or investing based on other people is kind of a fundamental thing for society now. We all value community.
We talk about the resilience of the U.S. economy, but around the world, we still have other issues. I mean, we have the UK's economic meltdown, and we have China's weakened stance in regards to real estate and consumer spending. If those headwinds persist, how hard will it be for Bitcoin or some of these other cryptocurrencies to start the next bull run, regardless of what's happening in the U.S.?
Yeah, so it's interesting that you brought up the global environment, because I think it's a good story for crypto that crypto has been so resilient or has been building that foundation when it feels like everything else is imploding overseas. A lot of the reason why we saw this latest sell-off in stocks through the end of September was because rates were rising even higher. The 10-year was going to 4%, and the dollar was surging. Those are two fundamentally negative catalysts for crypto, yet crypto held its low and stayed above its lows. And when I say crypto, I mean Bitcoin and Ethereum. I use those as proxies. I think the global environment is still a huge catalyst for crypto. I think you'd be foolish to say it isn't, but I do think that, crypto is showing that, it could be finding a base here. It could be, acting more resilient against what we're seeing overseas and these little pockets of panic that we're dealing with. And I think it also says something about the bigger environment too. I think it shows that we really are at the point where investors are questioning, if this is going to escalate into more. And obviously, we're not in a good situation. I don't want to paint that picture because there are a lot of issues in the global economy that need to be solved. But it feels like we've accounted for them in a way. And it feels like that latest stock market sell-off that we saw could have been the final straw if we don't tip ourselves into a severe recession. And I think crypto, in a way, was kind of telling us that. Crypto said, I've already taken my licks here, but I'm at a point where people see buying interest regardless of what the headlines are.
All right, that's all for Crypto World today, but we'll be back again tomorrow, so we'll see you then.